Hello traders, and welcome to my 7th candlestick practice trading video. So again, in today's video, like we've done in previous videos, we will be looking at candlesticks and gauging candlestick strength using volume and Fibonacci retracements to see whether we want to buy or sell based on certain candlesticks. Also, you can get a bullish bias and a bearish bias just by looking at these candlesticks. And I hope by the end of this series of these videos of practicing candlestick trading that you can understand the movements in the market and why price will go down and why price will go up and the reasons why, and really how charts can reveal when price is about to go down or when price is about to go up before it actually happens, if that makes sense. So yeah, without further ado, let's get started. The first thing that I'd recommend you guys look at is this candlestick cheat sheet. Basically, all you're looking at is just a lot of candlesticks and the ways that they react in the market. So these are some bearish candlesticks. These are some bullish ones that you see all the time. And then also how candlesticks work. And as always, the most revealing candlesticks are usually the 3 candle patterns, like the evening Doji star, and you can't see it right now, it's because the webcam, but there's also a morning Doji star, which is just the reverse of this. And then also bearish engulfing and bullish engulfing are important as well. Now my other cheat sheet, I also have bullishness to least bullish and most bearish to least bearish, and then indecision candles. So yeah, this is actually my favorite candlestick chart ever, really. I would say that this has been very helpful with me trading, with my trading. And just a note on these indecision candles. Basically, what these mean are if price is moving upwards and you see any of these 3 candles, typically that means price is going to go downward. Same with the bearishness. If price is trading downward and then you see 13 or 11, typically that means on high volume price is going to go up. It might form like an evening star or something, or a re-engulf, but that'll probably happen. Okay, so without further ado, let's get started on gauging candlestick strength. So the first question I'm going to ask you guys is that if you were in a position right now and you saw this triple candlestick formation on the hourly, looking at volume, and based on all that we've learned, would you hold or sell in this position? And also, what is this formation called? I'll give you guys 5 seconds. Yeah, so this is called the evening star formation. And an evening star formation is basically when you have bullish movement upward, gets stopped by a doji candle. This time it's a hammer, so quite bullish here. And then you have a bearish engulfing candle downward. And the answer to this one is it would actually be better to hold. And here's why. You have 2 very bullish candles. I know this is an evening star formation, but you have 2 very bullish candles with very nice volume. So you can see here, and the main reason is that this bearish candle just does not have a lot of volume. And what that means is that in this hourly period, when price went down, not many people sold. And that means that in the future, probably not many people would sell either in the near future, next few hours. So basically, this would be, I wouldn't really buy or sell in this position. I would just wait for the market to react. And if you had, then you would have had this happen. And then, you would have had that happen, and then you would have had this formation, which is completely different. So if you had seen this formation then, would you sell here at the 291? I'll give you guys 5 seconds again to, I think you probably can guess what this formation is, but whether you would hold or sell. Yeah, so I just said this is basically an identical, but just a different doji candle. This doji candle is an indecision doji candle. And then here, what's pretty interesting is you have a lot of bullish movement after a little bit of consolidation for a few hours. And then you have a very high volume doji candle, and you also have a very high volume bearish engulfing candle here. And this formation right here looks very bearish. This is very likely to cause the market to go much lower. There's a lot of selling volume here. In these 2 hours, it's about 8,200 plus around 8,100. So that's like around 16,000 Ethereum were transacted in those 2 hours, and the price moved downward. So that typically means that this is stopping, and that you're about to get more of a bearish bias in the market. We do get some consolidation here, though. But this is also a very interesting spot. What do you make of this formation right here? And I'm going to give you guys a hint. Look at volume and look at this candle. Look at the volume of this, and then look at this candle. I'm going to give you guys 5 seconds to gauge where you think the market will go. Yeah, so with such weak volume, when price moves upward 1.234%, this is just really a horrible spot. This is also what's known as a bull trap. So what a bull trap is when price is moving upward on low volume, and then a lot of people rush to buy, causing the price to go a bit upward. A lot of people buy at this top. That's also resistance here. And then price flips down and engulfs. And in that engulfment, the reason why so many people sell are that those more amateur traders who just hopped in the market after seeing price moving upward panic sell, and then you get this. This becomes a market top. So yeah, weak bullish volume, flipped up candle, and then it flipped down and engulfing, and then also the bull trap. So this is a really bad spot to be in the market now. Yeah. And now I think, yeah, what I outlined here is just basically, this is going to be a little harder, but this is actually probably much more, I just kind of gave it away, but just focus on this like box that I have right here. I'm going to try to fit it to the screen. Yeah. So instead of looking at an individual candlestick or 2 or 3 candlesticks, instead look at this entire trading range. And just based on what you've learned from my videos or articles or wherever you've learned, just from experience, gauge where you think the market will go. I know I just revealed it, but try to find reasons to why that happened. And importantly, look at volume and also look at the strength of these candlesticks. I know you can't really see volume because, again, the webcam. I think that's a good indication, though. So that's the volume. If you want to pause the video and just take a look at that. And then I'm going to zoom in for the individual candlesticks. So if you already think you know what's going on here, well, I'm here to answer that. So let's walk through this entire trading range, and we're going to see how this became a period of distribution. Accumulation and distribution are 2 terms used in markets, and basically, in any consolidation period, you always want to be looking at whether price is accumulating or price is distributing. Accumulation means that many people are buying within that consolidation range, which is propping up demand for the price to go higher. And in a distribution phase, typically what that means is you have a consolidation period, not much market movement, and then a lot of people are selling like this, and like this, and like this. And a lot more people are selling than buying. And that's because the, I would say, smarter market participants are getting out of their positions, and then the more amateur retail traders are getting into positions on lower volume, of course. And that would be called a period of distribution. So yeah, I think this is a period of distribution. Let's go exactly into why that is. So to start off with, we have incredibly weak bullish volume going upward. So you can see right here, way below the moving average. Then you get decent bearish volume, still weak bullish volume here. Increasing bearish volume, nothing really special about this. And then increasing bearish volume here again. Absolutely no volume here on this hourly. And then you get strong market movement that gapped downward. Again, weak bullish movement. This is all setting up to be a distribution stage. Here, you can see the market had high tails as price had tails printed much higher. Here, 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 here. And then you had this candle. Now, on first thought, this might look bullish to you, but if you really look at this candle, it truly is not. When you see a lot of volume at a resistance zone, typically that means the price will go down. And with this indecision candle, like what I just said about 5 minutes ago, how if price goes up and then you see an indecision candle, typically that means the price will go down. And we can really see that applied here. And if you had sold here, you would have saved yourself a lot of money. Yeah, so we have this gigantic volume, looks like about a triple or 2.5 moving average volume indecision candle that propels the market all the way down to 280. Again, more distribution here, really no volume here. This would be a fantastic place to sell if you had not gotten out here. It's kind of hard to sell when the market goes up after it goes down, because what happens is, like, let's say people who buy here and they see the market go down, they want to recoup their gains. When they see the market going up, they think that, you know, they'll make their profit back. But really, this is not a good sign. When you have volume that's this tiny and it's moving upward after a strong period of bearish movement, this is really going to be a really bad spot to buy or hold. So then you get a re-engulfment right here, not surprisingly, as price destroys people who had bought here. Strong volume again, more distribution, and then this candle really didn't have too much volume here, meaning that price is probably not likely to break down immediately, and it doesn't. And you can see that there's some bullish movement back upward. And I did notice, I think, that it moved up to a retracement level. That was kind of interesting, yeah. And it moved up to the 50% exactly. This retraced 50% upward. Yeah, and then also you can see this a little over the 61.82. Yeah, so then you have this candle that's quite strong that really instigates the downward movement. So this is really another really good spot just to get out of the market. And if you still hadn't have gotten out of the market and you see this period of distribution because of what you know about candlesticks and volume, then this candle is really death right here. Strong bearish movement downward. We get a bullish movement of plus 0.776% upward, but volume is only around 950 for 1 hour, and that's not good. And then you get these tails, some indecision candles, which means, you know, price is likely propping up for a big move. And then here comes the move. And the move is supported. I highlighted this one because one might think that this is a bullish candle because, wait, the tail is twice as long as the body. Why wouldn't price go upward? When you see price trading in a consolidation period and then price breaks out to one side and then makes a tail like this, this really almost always will mean price will continue going downward if this is high volume. This would actually be very bullish if, like, let's say price had been moving downward for many periods, like many hours, and had gone through a few Elliott waves, and then you see this candle in high volume. That would actually be quite bullish. But here it's a breakout, so it's not going to be bullish. Bad spot to buy. Market moves down on declining bearish volume, which is already setting up for a movement here. And then, yeah, you get this candle. This would not be a terrible spot to buy, honestly, and especially I had actually bought after this candle right here because what I had seen in the market, I sold over here. What I'd seen in the market is this is strong bullish movement that is also a hammer. If you look back at the beginning of this video where I showed the cheat sheet, this declining bearish volume is quite bullish. You can see we have volume falling as price barely falls, and then you get some movement upward with really not impressive volume at all. And I think I got out of the market for a small profit somewhere. I think I got out. Yeah, I got out in this candle, I think. Yeah, in this hourly candle. Because basically what I had seen was in the market, when I had seen this movement upward, yeah, weak bearish volume, good. Price will continue probably going upward. Weak bearish volume, good. This all looked good until I saw this combination. Then I got out. I got out here-ish between these two. I had seen that, let me zoom in. I had seen really, what is this, 800 Ethereum transacted in 1 hour. That's really nothing after double that had been sold. And then you get this strong movement here, and I'm out of the market. And then this becomes more of a period of distribution. And I think the price will probably either move a little bit upward and then go down, or the price will just crash right now and go down to the 238, 238 to like 240 level, because that's the 61.8 of this overall level. Yeah, I just fit in some price prediction right there, free price prediction. And then also what we can see here, if we just zoom in, just on a little extracurricular on this video, do you see this declining volume right here? As price moves upward, we have volume moving downward. And that really is a telltale sign that this correction is not done yet. I'm still quite bullish on Ethereum, to be honest. I just think that we have to correct first, and then after that, I think we're actually going to break the all-time resistance at $420. I think that will surely be broken within the coming weeks. So yeah, I think price just goes down a little bit more, and then great spots to buy, and then we get a continuation of my Elliott wave. Yeah. So that's going to be it for the video. We've actually packed 3 lessons into this video where we talked about candlestick trading, just basic volume, and analyzing candlestick movement. We've talked about accumulation and distribution as well. Again, accumulation, consolidation period, or even an uptrend where the buyers are stronger than the sellers. There's a lot of bullish volume going into the market, but not so much where price becomes overbought. That would be the case. It would not be an accumulation period if price skyrockets upward and then everyone buys. That would be an overbought point. But in a period of consolidation with not much market movement, you need to see who has stronger volume. And whoever is winning that volume fight is probably going to win the fight in which way price breaks out eventually. Then also distribution, which is this. We've gone over that. And then also we went over a quick little price prediction based on declining volume upward. And then just how this market looks right now and how the 61.8 retracement's at 238 to 240. And yeah, that's going to be it for today's video. If you have any questions about candlesticks, volume, or why the price goes down or why the price goes up, feel free to ask in the comments. Thanks for watching.